Everybody, welcome to the Baguette Investor channel for a new weekly review. Today I'm going to make a very informative and interesting video for you, so I hope you're going to find this interesting. Keep watching until the end. We're going to do, like always, check my weekly performance, and after that I'm going to explain you to why we're actually not in a bull market on the stock market. This is a very interesting topic that most people don't understand, and we're going to get a little detailed view of the stock market. So first, very quick view of my performance in the last week. You see I had a very amazing performance, and now I'm trending back down, back into this range. My total profits in my whole account are 13,000 euros, and that accounts for almost 25% since I started tracking my performance, which is relatively good. But considering the markets we are having in 2021, because I started back in January 2021, it's pretty amazing considering the market we have in 2021. Let's get to stocks. So I'm gonna explain to you my thesis on stocks, and at the end of my thesis on stocks, I'm gonna review crypto. So you can jump right to the crypto part if you don't want to hear about it, but I think you should stay because it's a very interesting topic. So we have the Nasdaq. This is the QQQ, but it's the Nasdaq Etf. What you can see on the Nasdaq Etf, it's very simple. You might say, what's a bullish trend? It's a market that goes up, and you can see the Nasdaq going up. So we're in a bull market, right? Yeah. You go to check the S&P 500, you can see it's going up. We're in a bull market, right? The S&P 500 is going up. So this is where most people stop. They look at the S&P 500 and the Nasdaq, and they're like, well, we're in a bull market. Everything is going up. It's very easy to make money in this market. And I very, very much disagree. I'm going to take a look at different metrics and see how people are mistaking themselves when thinking everything is going up and we're in some people even say we're in a bubble market. And that is absolutely crazy to say this. So this first metric is a very interesting metric. This is the percentage of S&P 500 stocks above their 200-day moving average. So when we're going to take a simple stock, like, I don't know, which stock are we going to take? We're going to take Microsoft. We're going to put the moving average. I'm going to try to do it very fast so you don't have to wait much. Boom, we're going to take the moving average. We're going to take that as a 200. So you might understand what that is. There you go. This is a 200 moving average. This tracks the number of stocks that are actually above the moving average. Very simple. Hope it's clear to you. Then I'm going to hide it so we might need it in the future. Go back to this. There you go. You can see that since April 21, this metric topped. And since then, the number of stocks above their 200 moving average in the S&P 500 has been going down, which means that in a bull market, you would see all the stocks rising above their 200 moving average. And you can see that what's actually happening since April 21 in this indicator is that it's been going down. We have the same metric for the Nasdaq Composite, which is all stocks listed on the Nasdaq Stock Exchange, which percentage is above their 200-day moving average. You can see, since February 21, it's been trending down. Most stocks have been actually going down since February 21. Now we're going to go over the percentage of stocks all over the US that are above their 200. And you can see since February 21, the number of stocks are going down. Another one, so I pushed really this into your head. This is the Russell 2000, which is the small cap index. You can see small caps have been going down. And all over the markets, the S&P 500, the Nasdaq, the whole stock market and small caps, everything is going down. But why? Why is the QQQ and why is the SPY going up? Why do people think we're in a bull market when in most stocks we're actually in a bear market? Well, this is because of market capitalizations. The S&P 500 is a market cap weighted index, and there is a possibility to check the S&P 500 with every stock in the index representing a single same weight. And you can see that the equal weight S&P 500 has been in less of a bull market than the previous. And you can see, for example, that over the past week, we can see it right there. The equal weight S&P 500 has been going down, but last week we were actually almost going up. So there's a clear difference between the S&P 500 with the biggest companies representing a bigger share of the index, whereas when you look at the RSP, you see that the trend has been much less of a bubble. And when you see this index right there and you see this, can you really say this looks like a bubble? This does not look like a bubble. It surely goes up slightly. It surely follows an incredible upward move, but does it really look like a bubble? No. This is the kind of market that looks like a bubble. This, like you can see right there in 2018, but this is nowhere near what we call a bubble. And our goal is really to understand which kind of stocks are going up and which kinds are going down. So we're going to go into a bit into the detail about. First, we have now understood that the whole market is actually not going up. If you try to buy the average stock in the market right now, this stock is actually going down all over the market. It's very, very hard to make money buying random stocks at the moment. It's not easy. Back in the days, after the COVID crash, all over here, you bought a random stock, it was going up. You thought you were a genius. Now you buy a random stock, it's going down, and you think you're a loser. And this is exactly what's happening to me at the moment because my strategy relies on breakout trading, and I need momentum. I need buyers to get into the market. And right now, you can see buyers are actually getting out of most stocks. And you're likely to wonder, where's the money going? Well, first and clue is what I talked about, the QQQ and the S&P 500. What's going up in these indexes? I think you guessed it. You can take a look at this ETF, which is an index of the top 200 growth companies. And it's going up like crazy. This looks much more like a bubble, if you ask me. This is a bubble, okay? This is really this is a bubble in terms of technical analysis, in terms of corporate profits and all that stuff and fundamentals. It is much more complicated. But in terms of technical analysis, we're getting into a climax run, an irrational bull market. But it can keep going for quite a while. I can take you a look at the S&P 500 with only growth companies. Take a look at this. This is going up. S&P 500 with only growth companies. Now, compare this to the S&P 500 with only value companies. Look at that. We have another kind of example of one market that is just not moving. We are trying to initiate a new bullish phase, but since May 21, nothing has happened on this index. And if you had YOLO'd value stocks in the market, you would just not have done anything since May 21. Of course, you would have made a nice run after the COVID crash, but for now, this is just not interesting. So if you look at S&P 500 growth, so this is the biggest growth companies. Okay, this is going up quite a lot. You look now at mid-cap growth companies, and you can see it's the same story. They've actually not gone up, and now they've just started to go up, and they're now trapped in a daily range. And the question is, will they get out of this range, or will they come back to retest the lows? If you look at small cap growth, you can see it's the same story. They've been trapped in a range and they've not done anything. This correlates to with our previous analysis of stocks, more and more stocks becoming bearish compared to their 200 moving average. So we see big capitalizations growth going up, mid caps not so much, and small caps very not interesting. If you look at the correction here, you can see mid caps being much stronger than small caps, and big caps just killing it, showing you where the strength is in this market. So the choice is made. We see the strength is in big cap growth. Okay, but what is big cap growth exactly? Well, big cap growth is very simply what's composing the QQQ, which is technology, really electronic technology and technology services. And I have my little list right there, which is called FANGAM plus for, the big tech company, starting with Apple. You can see Apple is actually taking the market. It's like 10% of the S&P 500. So when this moves up, this really moves the whole S&P 500 like crazy. Microsoft going up in a straight line since May 21. Google also up. Amazon, which is that in a range, but it's starting to move up. If you look at the monthly, you can see Amazon is looking very nice. Tesla, which is, no need to mention this one, which is a huge weight in the QQQ, and it's gone up like crazy. Facebook down since September. Nvidia, an amazing weight in the QQQ, and you can see it's gone up like freaking crazy. Adobe, it's gone up. Netflix, it's gone up. Salesforce, it's gone up. Oracle, it's gone up. Accenture is going up, AVGO is going up, and all that kind of stuff. So big tech companies are just killing it. You can see Apple is up to 75%, but this is only this going up. There's only this going up. The average stock in the market is down, and this is crazy. People think we're actually in a bull market, whereas we're in a sectorial bull market. The definition of a bull market is really widespread of the majority of stocks going up. And this is not what you're seeing. Okay? I hope to tell me in the comments what you think with my analysis. But what I see right there is the majority of stocks go up. Right there, I'm seeing a minority of stocks going up. And you need to know which one they are. It's really technology stocks. Now I'm going to take a look at another thing that I think is very interesting. It's value over growth. I made a video about that, on my understanding of value over growth. You can see since basically the Great Recession of 2008, value is just being killed by growth. Growth being tech and electronic technology is just beating the whole market. So in order to make money in this market, you just have to buy the QQQ and you just become rich. That's all this market is doing. And many people are trying to do stock picking. But why is stock picking so hard in this market? Because of this indicator. The average stock in the Nasdaq, in all the US equities, is going down, and you really need to understand this. I hope my presentation was interesting, and now I am telling you that I'm really taking a look at the big tech companies. I bought Apple. I don't know if you saw my trade. Oh, no, it's Microsoft. I want to buy Apple. Yeah, there you go. I bought Apple. I YOLO'd Apple really like big balls. I YOLO'd Apple on this breakout, and I don't know why, but Apple seems to be the hottest stock at the moment. So very, very good buy. I also bought Adobe last week. Bought Adobe, and now you can see it's having a nice breakout. And I'm having my eyes on big tech companies like Apple, Salesforce, Fortive Corporation, Ansys, and really big tech companies that are evaluated more than 30, 40 billion. These companies are really the one to look at. And also I have trouble speaking English today. Really, top 200 growth ETF. I don't recall if I have this ETF right there. No, I don't have it, but I have PEZ. No, this is retail. This is another thing. So yeah, really check Russell Growth ETF and take a look at the holdings, and you can see that this is just going up like crazy. And this is a climax run. This is a bubble advance. But remember, it's very, very localized. If you buy the random stock in the market, you're going to be very rapidly deceived, because you look at MDY and you look at SLI growth, you can see that for all this time, if you YOLO'd random stocks, you were getting wrecked. Maybe we're seeing a new bull market on mid caps. Maybe this is possible, but right now, really focus on where this trend is. I'm gonna set myself a little alert right there to tell me if this breaks this line. I'm gonna check right there. Boom, there you go. And then I'm gonna be notified when it breaks above. There you go. So crypto, to finish this video, nothing to say. It is very boring, the markets in crypto. Same as stocks, really. We've been trapped in this huge range since May 21. Of course, there was some money to make on altcoins right there, especially NFT. Back here, there were a DeFi bull market, and there they were the NFT bull market, and in the in-between, this was the general bull market on on the markets, but you can see right there that we're in the same situation as stocks where only a few coins are going up. If you look at right there, I don't have them. Oh, curve is actually moving up from this support, right? And interesting. Only a few stocks are going up. I'm gonna try and see if I can have the list for you. I'm gonna type in. It's gonna be faster. EGLD USDT. There we go. You can see only two things I really see are going up, which is EGLD and AVAX. Basically, there's only these two going up. All the rest of the market is really uninteresting and going down. We've been really struggling to get past this resistance. We're not finding support on the altcoin market cap, but Bitcoin, this is really not the kind of setup you want, because if we start to break and make new lows, this is going to be very, very bad. This is similar to what happened right there where we failed to break above. If we don't reclaim these highs, I'm going to be very cautious about my trading. Right now, I'm no longer aggressive. I was very aggressive right there on the breakout because there was a very high probability that we jumped slightly very fast in a bubble. But right now, there is nothing really interesting. I'm still looking at some other opportunities, but they're more short term, and I'm very cautious about my trading. And if you look at Ethereum on the weekly, it's still bullish, but we're no longer explosive like there was the possibility to be right now. We are maybe printing another consolidation. You know, it's very possible that we make another consolidation like this, and that would be very interesting. But there is no need to rush right now. I also have a very bad trade going on. These guys from Lusco announced their mainnet was postponed. You can see many people got out of this very fast, and yeah. Fortunately, I only have 600 euros in this, so it's not a big deal. This is you need to be cautious about your risk management. But yeah, this can happen. So be very cautious about what's happening. That's it. I hope you enjoyed very much my thesis on the US stock market. Thank you so much for watching, and see you in the next video. Goodbye. Have a nice week. Trade well.